BigBear.ai Holdings, trading under the ticker BBAI on the New York Stock Exchange, is currently priced at $5.28 USD as of 11:50 a.m. EST on Friday, January 30th, 2026. The stock is seeing a notable intraday decline of 4.35% during this session. While a drop of over 4% usually sends retail traders into a bit of a panic, there is a much deeper story playing out here that the surface-level numbers are not telling you. If you were just looking at the red on your screen, you might think the company is losing its footing, but the reality is that BigBear.ai has just moved a massive chess piece that fundamentally changes its risk profile. They recently completed a full conversion of $125 million in convertible senior secured notes into common stock. In plain English, they just wiped a massive chunk of debt off their books and replaced it with equity. This is exactly the kind of move that creates short-term price turbulence because it increases the number of shares in circulation, but it also removes the debt noose that has been hanging over the company's neck for years. Most investors see a price drop like this and assume the AI hype is fading or that the company is failing to execute on its contracts. That is the expectation that BBAI is just another small-cap AI play that cannot survive without constant cash injections. But the reality is that they are pivoting from a cash-strapped defense contractor into a leaner, more agile technology provider. We are seeing a classic expectation versus reality disconnect. The expectation is dilution and weakness. The reality is a significantly strengthened balance sheet that allows them to compete for much larger prime contracts without the fear of a liquidity crunch. This shift is happening right as they have secured a strategic partnership with AD Ports Group and Makta Technologies to deploy AI for global customs and border operations. Think about that for a second. While everyone is focused on the intraday price action, the company is quietly plugging itself into the $17 trillion world of seaborne trade. Recent stock movement has been a roller coaster, and today's 4.35% slide is part of a broader 20% decline over the last 90 days. This cooling off period follows a massive run where the stock was up over 33% on a one-year basis. We are seeing institutional activity start to stabilize after a period of heavy volatility. When you look at the volume today, over 27 million shares traded before noon, it's clear that BigBear.ai is not just sitting in some quiet corner of the market. There is a high-stakes battle happening between short sellers who think the dilution will crush the price further and long-term institutional buyers who are looking at the massive $715 million cash position the company reported in its last major update. If you're using an online investment platform like the Robinhood app or SoFi Invest, you've likely seen the volatility alerts. But for those looking at investment help through a more traditional lens, like Fidelity Wealth Management or Schwab Intelligent Portfolios, the focus is increasingly on whether BigBear.ai can actually turn this improved balance sheet into consistent revenue growth. Speaking of revenue, we need to talk about the earnings reactions. Back in November, the company surprised a lot of people by beating earnings per share estimates, reporting a loss of 3 cents against a 5-cent expectation. Revenue came in at $33.1 million, which was a 4% beat. However, the market focused on the year-over-year revenue decline rather than the bottom-line improvement. This is where the tension lies. The market wants to see the AI in BigBear.ai translate to exponential growth, but because they deal largely with the Department of Defense and other federal agencies, their revenue cycles are long, bureaucratic, and lumpy. You don't just switch on a $100 million contract with the Navy overnight. It takes months of technical and engineering services, which is exactly what their Seaport NG program participation is all about. The reality of the defense AI business is far slower than the expectation of the Silicon Valley AI business. If you look at the trading volume on Interactive Brokers or the Fidelity trading platform, you'll notice that BBAI has become a favorite for high-frequency traders. This is largely because it's one of the few pure-play AI stocks that actually has a deep, multi-year relationship with the national security community. They aren't just building a chatbot, they're building what they call decision dominance tools, like the Virtual Anticipation Network, or VANE. This system is designed to analyze news and data from foreign adversaries to predict geopolitical risks. It is high-stakes, high-margin work, but it's also highly scrutinized. If the government passes a budget delay, BigBear.ai feels it immediately. This is why the diversification into commercial sectors like the Kraft Group partnership for supply chain visibility is so important. They're trying to prove they can survive and thrive outside the Pentagon's wallet. Comment below how many shares of BigBear.ai you currently hold, or if you are waiting for it to dip closer to its 52-week low of 2.36 before you consider an entry. The company's business model is essentially built on three pillars: data science, offensive and defensive cyber, and cloud solutions. They take messy, unstructured data and turn it into something a general or a CEO can use to make a decision. Historically, they came out of the SPAC boom, which gave them a bit of a meme stock reputation early on. That is a reputation they are still trying to shake. The older reports showed a company that was struggling with high interest rates and a heavy debt load, but the recent move to exchange senior notes for equity shows a management team that is finally getting serious about long-term sustainability. They also acquired Ask Sage recently, which is expected to be a major contributor to their 2026-2027 performance as government AI spending starts to hit its stride. When you look at the macro picture, the pressure on small-cap tech has been intense, with interest rates still being a major talking point and sector momentum shifting towards larger, more established names like Nvidia stock or Apple stock. Smaller players like BigBear.ai have to work twice as hard to get noticed. But here's the thing: Nvidia provides the chips, and BigBear.ai provides the mission-specific software. They aren't competitors, they're part of the same ecosystem. If you were doing online investing through a Fidelity brokerage account or self-investing via a Robinhood stock trading account, you have to decide if you believe in the picks and shovels of AI or the intelligence layer. BigBear.ai is firmly in the intelligence layer. Looking ahead, the catalysts are very specific. First, we have the integration of the AD Ports partnership. If they can successfully implement AI for customs in the Middle East, it opens up a massive international market that is less dependent on U.S. congressional budget cycles. Second, we have the Q1 2026 closing of Ask Sage, which is expected to be a major bump to their margins, which have been a bit soft at around 22%. If that provides an immediate bump to their margins, the stock could re-rate very quickly. The risk, of course, is competition. They aren't the only ones in this space. They're fighting against giants like Palantir and Booz Allen Hamilton. The expectation is that the big guys will always win. The reality is that BigBear.ai is often more specialized and can move faster on niche prototypes. Investors who use intelligent portfolio tools or look for investment help on various investing sites often overlook the institutional footprint. We've seen a lot of movement in Fidelity ETFs and Fidelity mutual funds that have exposure to the broader AI and defense space, and while BBAI is a smaller component, it's a high alpha one. If they land one more major prime contract, the current price of 5.28 could look like a steal. However, if they fail to improve those gross margins, they might find themselves back in a position where they need more capital. It's a delicate balance. As we look toward the future, the outlook for BigBear.ai is tied to the concept of sovereign AI. Countries all over the world are realizing they can't just rely on American or Chinese tech, they need their own systems. BigBear.ai's expansion into the UK and Middle East markets positions them to be the partner of choice for these sovereign AI projects. This is a much bigger opportunity than just being a subcontractor for the U.S. Navy. The expectation is that they are just a U.S. government play. The reality is they are becoming a global AI infrastructure provider. To wrap this up, the central insight here is that today's 4.35% drop to 5.28 is a reaction to short-term liquidity and dilution, but it masks a massive improvement in the company's financial health. We have seen a significant gap between the market's expectation of a struggling, debt-ridden firm and the reality of a company with $715 million in cash and a clean debt sheet. The transition from a defense-only model to a global logistics and supply chain AI provider is the key to their long-term valuation. Whether you are using a Fidelity trading platform, a Robinhood app, or an interactive broker's account, the play here isn't about the next 5 minutes of trading, it's about the next 5 quarters. BigBear.ai has moved past its survival phase and is now in its execution phase. The authority with